Hi, this is Julie, J Auto Trading Strategies, and I was off my game trading today. Have you ever had a bad trading day? Well, that was what I ran in today. Made some errors that were not necessary. So they were unforced errors, and so they were my errors. And so let's look at the charts and see what happened. Crude really took off on that open interest. The first thing that I should have known or realized was that the measured moves were working on the pullbacks, and we never got any further pullbacks after the open that deep. And the moves stayed within the first um, volatility band, and that's what we want to see. It's not so much that we went sideways here, it's that it never closed below my first volatility level. So I just should have trailed this up loosely on the lower time frame. That was my first mistake instead of getting in and out. Um, the second mistake that I made was not recognizing that the low of the day and the high of the previous day never retraced past the 23.6 Fibonacci, which indicates that it's going to be a range expansion day. And that's another reason that I should have just been trailing this up as much as possible. So those were my two big mistakes for the crude market. On the smaller time frame chart, oops. Uh-oh. What did I do? Let me take this off. Somehow I drug the pivots down there. There we go. Okay. What I wanted to show you was we had the original down move before the open, and then it stayed in line with the volatility indicator, the super trend. So here were the entry points. At the volatility indicator. I actually did get this one, but as usual, I let it off too soon, and I am working on getting better at that. And it made it up to the target at yesterday, 161.8, before coming back to the VWAP. But do you see where it came? It came right back to the super trend and also went back long. So here was another trend continuation move back to the 161.8. And then it closed, the bars closed on it on their high. So I was off my game somewhat, trading this morning and not getting that early read on the fact that it only retraced to the 23.6 from the previous swing high low, which indicates that it's a much larger range expansion. Let's take a look at the E-mini, and it rallied up all day until the end of the day. And this is too big of a bar for that contract. Let me knock this bar size down. Okay, let me just bear with me just one moment. Okay, I've got my data back. Should you try to go to a contract and get the funny looking bars, that means that you need to go into your historical data manager and re-download some tick data for that instrument that had the bars broken. Sometimes the data can get corrupt in the database. So here on the E-mini, I like the 3-3 for a tick range, and it ran up all day. That would have been a nice trade to have made. Just picking those 3 trades off would have been sure winners had I been watching that market. So all in all, a very disappointing day for me today. Off my game. We can all have a bad day. So I will be keeping my eye on the market, and contract expirations are coming up. So need to keep our eye on that. When you see something that's bullish and then it's selling off, this came out of the range. As you see, it had already gone up above the range and then came back towards that reversion to the mean trade that gold so often does. Very, very typical of gold. So put a VWAP on here, and no doubt it will be very close to that VWAP on the close. Yep, see? So that's what it does. And soybeans are really doing well. The problem with beans is the front month has 12,000 contracts, but the month everyone's trading has the 92,000 contracts, and there's a huge difference in that volume, and I'm afraid we can only trade the front month in the combine account. So not quite ready to flip over to that second contract, but keep an eye on the beans. It's rallying up also for some very nice trades. So I'll be monitoring the contracts that are expiring and get my charts in order and try to have a little bit better of a day tomorrow. Y'all take care, and keep your powder dry for the FOMC minutes on Wednesday. Thank you.